All right, part two of the weekend market update, folks. You've got the Bitcoin, you've got the miners, you got the MSTR update on my last video. Now we're going to go through ETH, traditional financial markets. So SPY, I'll use Nasdaq, do dollar, gold, yields, and we'll call it a day. This should be a fairly straightforward, quicker video. Not a ton to update. Markets are just looking fantastic. Moves are coming to fruition as we've been forecasting them. And so I'm going to start with ETH right now. And this is a weekly chart. And folks, this is the easiest way for me to illustrate this move here and what I'm anticipating in the short term, medium term, long term. So how I've been tracking this, you've all seen me kind of illustrate this. Adam and Eve double bottom, come out, retest. The retest gave way, but this, in my opinion, was simply just a deviation, a fake out. And now what do we have? We have yearly highs as established on April of 2023. You have a breakout of yearly highs, and let me just zoom in for us. You essentially have a textbook retest, okay? A textbook retest of those yearly highs to the candle wick. And so from a technical perspective, this is bullish. This to me is what you want to see in a continuation pattern, right? Consolidation under yearly highs, breakout, retest, next target's 3,000. I think it exceeds it. Maybe you get a retest, maybe you don't. And then we're off towards a move towards new all-time highs. So not much to update there other than structure maintains its bullish bias. We are in a clear trend, and folks, if the trend is in what direction? That's the direction. And within these trend channels, right, you can move up and down and up and down. That's volatility. That's the price you pay. But to me, the trend right now is very, very clear. Next, let's go to SPY. And what happened here? Let's see here. SPY. Okay, I'm going to use my daily chart. And I posted, I think I've been posting this chart fairly regularly. And this count seems to be tracking pretty well so far. So from a structural perspective, I had noted a few weeks ago that the 1-2 movement of this first minor impulse was very, very shallow. And then my expectation was then for a 3-4 to mimic that same movement within the lens of this major wave. These minor waves, right, the subwaves, are going to mimic each other more closely. And so what we have here is seeing that play out, right? Very, very short consolidation, 3 short consolidation, vertical accumulation structure. Just very bullish. These are very, very rare type setups that present themselves, in my opinion. Again, disclaimer, I'm not a financial advisor. Don't take this as financial advice. I don't know what's going to happen next in the markets. I'm just forecasting the way that I am reading them. Use this as educational purposes only, please. All right. With that out of the way, what do I see happening next? Well, I see a lot of top calls here, right? Top calls, time to go down. Well, you could get a move down. That's always in the cards. That's always a probability that you have to expect. However, this is the dominant structure. That's the dominant structure. That's the power of the move. We had a massive consolidation coming into that. Therefore, my bias has to remain shallow dips followed by stronger rips. That just has to be the bias because that's what's been presented in front of us so far. So in terms of this count, if I'm visualizing it as 1, 2, 3, 4, there's a 5th impulse that could be in here, right? And you could start a correction ABC, something down to the 450 range. That's the least likely probability in my mind. I see this move going to all-time highs into the end of the year prior to any type of correction, and then move up and out of there. I could be wrong. I'm not trying to play in and out of these markets. That's the last thing I would do here. The reason I feel like the path of upcoming is going to be one of continued upside with shallower dips is is a dynamic that I don't think a lot of people talk about. So this whole rally year to date, I believe most hedge funds have not been outperforming, or traders. In fact, I think they've been underperforming. I think a lot of people have been caught on the wrong side of this move, which means that they were either short or sidelined, which means that the markets have been outperforming them in either scenario. And so if you look at the way that the markets are constructed, about 80% of all the purchases made on a daily basis are passive, 401ks, pensions. And so the 20% that decides these price fluctuations at the margin, that's the traders, that's the active managers. And so the way that they're judged moving forward from now is their gains from here 6 months out, from here a year out. And if you're behind, if the S&P is beating you, you're now judged for, you're highly scrutinized in terms of your returns moving forward. And that could present a big problem for bears or sideline folks expecting big dips, because this dominant trend, let's just look at the trend. The yearly trend is very clear in terms of its direction, right, folks? Which way is it? It's up and to the right. And so folks that need to make up, are they going to continue shorting, doing something that hasn't worked, or look for these dips to buy and participate in? And so that's what gives me the thought that the markets just continue to move, shallower dips, continuation, because folks have been on the wrong side of the move. That's capital that's going to also push this move higher that wasn't there before. Okay, that's SPY. What's next? Let's do the Nasdaq. The Nasdaq structure on a weekly time frame is just looking beautiful. Right? I've got my counts up here. I've got RSI on the bottom. As you'll note here, we aren't even in overbought territory on the RSI. Similar spot earlier on in May, right? We were in that range, and we had another 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks until we reached a local top of any kind. So again, my bias here is that this move is underway and is going to, the path of the greatest pain is continuation. This is a bullish, right, flag type structure, and that's just how I'm seeing this play out. Could I be wrong, and could we have a little pullback prior to resumption? Sure, but the way that I'm reading these markets right now, my bias is towards continued upside. All-time highs is the next move, and that is supportive in terms of the power behind the move expressed in RSI at the moment. Okay, next. The dollar. The dollar continues to perform how I've been expressing it within this chart on a weekly time frame. We are still below this channel. This is a range high that goes back to 2016. I believe we are in the midst of this corrective move that takes us to at least the mid 90 range. You'll also note here, the cloud on a weekly time frame, price has not been able to reclaim the inside border of this cloud. And so again, can we get zigzags along the way? Absolutely. Let's take a look at the daily time frame. I think we had a little bit of a yep, this is good. This is good. So as I mentioned last week, nothing moves in a straight line. Nothing moves in a straight line. So we had move, counter trend move, counter trend move from a, I'm not trading this, right? I'm not trading this, but from a simple, trader's perspective, what do you have here? What do you have here? You have a retrace into resistance. You've got a retrace into this resistance block back from November. And so my assumption, could be wrong, is that, even if there's a deviation reclaim here, this continuation down, or we just get continuation down. That's the way I'm reading this on the short and on the high time frame. All right, what's next? Yields really look problematic to the downside. Again, this is one I've been tracking for some time. You all saw me express this ascending triangle breakout. Technically is bullish, but what's bullish about it is what happens after. Is this really a bullish move? Is the power behind this really bullish? Well, what happens next tells you that. And that didn't happen. That didn't happen. And technically speaking, we even got that retest. And this is why I don't like retests of macro high time frame bullish structures, because on such a high time frame, if this truly was a powerful move, you'd expect it to maybe come close, but then keep going. In fact, you did get a little retest, but that failed. And then you got what I was looking for, which is a move up and under this line of resistance and a rejection. So from here, where do you go? I don't know. Just like the dollar, you could get a little counter trend move prior to resumption down, counter trend move, resumption down. Who knows? Who the heck knows? But the trend here is your friend, and the trend right now is that. That's the trend, right? And within the trend, you can get lower highs, lower lows. So that's how I'm monitoring yields. Last but not least, we've got gold. Gold structurally is a bullish structure. Once again, we are at the high end of this accumulation range in the sign of strength region. Okay, we had a back up to the last point of support here, and now we're just consolidating at range highs, at highs that go back all the way to August 2020. And so my bias here has to be breakout. My bias has to be breakout. Could be wrong, but that's just the way that I'm reading it. Folks, I hope you had a great weekend. I hope you enjoyed both of these updates. Take care. Look forward to doing more. Thank you all for the kind words in the comments.